We're with Kirby Smith from 2 Mile Bay Financial Planning today. As a reminder to review life insurance, because it's so important to protect our assets and our income. Kirby, what I see a lot of is people relying on their default arrangements within superannuation for their insurance, which is better than nothing. But what would you say are the risks associated with that approach?
So I see a lot of clients that have just taken out a mortgage and come to me with their superannuation statements and say that they're protected adequately within their superannuation funds. So ultimately there's a few things that you need to look out for when you have insurance cover within your superannuation fund. One of those things is that it could be unitised, which means that the death and total and permanent disablement cover will reduce over time as you get older. So your requirements generally stay the same whilst you're having children and doing those sorts of things. So it's important to check the product disclosure statement to make sure that you're on fixed cover rather than unitised cover. The other thing that a lot of industry super funds and retail master trusts are doing at the moment is putting another restriction on their total and permanent disablement contracts. That means that in the event of permanent disability, they can retrain you. So that ultimately means not only do you need to meet the condition that you're totally and permanently disabled from any occupation you're reasonably qualified, educated or experienced in, but they can also retrain you into doing some other sort of role. So I sort of use that as an example. So let's say you're a carpenter and you've done your back, you're unable to work ever again in your occupation. They can retrain you to work at Bunnings or to take sales phone calls at home and therefore not pay out the total and permanent disablement contract that you have. So we always advise people to come and see us. We offer complimentary appointments. We can sit down, go through what you already have in place and assess your needs for any additional insurance cover that you may need.
What about income protection?
Income protection inside superannuation is a very basic level of cover. It's an indemnity contract, which means that you have to prove your income when it comes to a claim. And there's a lot of sort of definitions and policy wordings within superannuation funds that make it quite tricky. So each superannuation fund has a different sort of wording or restriction on their contracts. Some of them actually have a capability clause written into them that say if you're capable of working but you're not working, we'll take you off claim. So it's really important. I think the main thing is that you get what you pay for. So ultimately, if you're paying a really cheap premium, the quality of the contract isn't there as much as what it would be if you were to take out a policy through a financial planner.
Are some income protection policies only for 2 years or all up to age 65 now?
Most industry super funds and retail master trusts will offer 2-year benefits. Some offer age 65. All our contracts through our office, we have access to 11 insurers, and we can structure a really good income protection contract with a super linking function. So basically that means 80% of your premiums paid through your superannuation fund and 20% is payable out of your pocket. So it makes it more affordable for your cash flow, but it still gives you really good quality protection.
So you're fully protected as
exactly.
opposed to default protected.
Yeah, and you get the service from our office when it comes to a claim. So we currently have 15 clients on claim with 2 Mile Bay and Torquay at the moment.
Great, good reminder. Very, very important
Thank
once
you.
the loan's in place. So thank you for coming and talking.